Alright, we're gonna do 2 videos in one day. So I just finished I didn't finish just right now, but I did the homework for yesterday, day 17, which is meditate for 30 minutes. Honestly, it was easy. It felt like 10 minutes. Not even gonna lie. 30 minutes of meditation, just sitting in darkness, doing nothing. Felt like 10 minutes. But anyway, I really wanna get into the market because I want to know. I want to actually do trades. I didn't trade this morning. I couldn't get up for it. I didn't make it, but what's it called? I really want to know what happened. And like, why is this kind of look like a liquidity sweep over here? And then it pumped up. I want to know why. I want to know how to actually place an order because I feel like if I did trade today, I might have lost. So let's see what Fair Value Gap Part 3 has to offer.
Welcome. Legiti. Welcome to boot camp day, who knows what. Last day of our fair value gap section. I watched over the second video and it wasn't as bad as I thought it was. So we're going to leave that one there. And then honestly, this video, there isn't too much to cover besides kind of recapping what we talked about in the first 2 episodes. That's kind of what the third one is for, just a whole recap and then showing how we can put everything together with it. So I do think the second one was good enough, and we'll go a little bit more in detail today on how we can use fair value gaps. But hey, we know why we want to use fair value gaps. We know why they're beneficial in the market. We know why the market reacts off of them. And we also know how to spot them. Okay, so with that being said, today is pretty much just going to be a quick overview, okay, and then kind of putting it all together, how we can, actually use them to make money. And honestly, today's trade that we took was a perfect example of it. So let's jump right in, you guys. So to start off, okay, this is going to be a lot because we're starting to put things together now, and it's no longer, this is what a liquidity sweep is, this is what a trend is. It's like, okay, we have a trend, we have a liquidity sweep, we have a break of structure, we have a fair value gap. And now that you have these concepts, I'm going to move forward as if you guys fully understand these things, okay? So if you don't fully understand them, that's up to you to go back, rewatch the other videos I've made on them, rewatch the bootcamp videos that I made on them, rewatch the old videos that I made on these concepts so you guys can be up to date. Remember, there's nothing bad about putting in extra work. Okay, so with that being said, here we go. Today was a prime time example of using a...
Here's a liquidity sweep, what it looks like. Almost. Might have not been full.
Fair value gap. Okay, so as we can see here, right, we were in a small little uptrend on the S&P 500. We then proceed to break structure on the 15-minute, okay? And what do we get left with after this break of structure, right? We see a big imbalance within here. We see this fair value gap. Is there a fair value gap within here? No, because this wick overlaps with this one. Is there a fair value gap within here? No, because this wick overlaps with this one. This is the only fair value gap we saw.
Okay, there could be multiple fair value gaps. I didn't know that.
Okay, scaling down. Where is market open? And we'll talk about the value that market open gives us later once we've covered all the building blocks. But
looks like, okay, you could target these previous lows which you hit here. Then it went lower to this previous low, it looks like.
We have market open right here. Wait, why is this not right? Oh yeah, no, that was correct. We market open right here. Okay, so we saw that break of structure on the 15-minute, and then we see price start to rally back up into here. This is all during pre-market, okay? So we see a tap into there, a break of structure, it falls. But we're not even looking at this because we're fast asleep or at the gym waiting for market to open, okay? Because we're not going to take any trades that aren't off of market open. okay, or aren't after market open. Okay, so we see price come into this imbalance, this 15-minute imbalance. We see a break of structure here, okay, rally back up. Break of structure here now, okay, we come down, make a lower low than this one, okay, so we can kind of like confirm that, okay, maybe we're trending down now, okay, and then we see market open, and we see a push up into this, another imbalance within here. So what did I do? I scaled down onto the 1 minute time frame, and all I was waiting to do, because now we have two confirmations, right? We have high time frame, break of structure, trend shift, okay? Then, okay, we see the imbalance on the high time frame get filled. What do? Scale down to a lower time frame. Boom, we see a break of structure. Okay, now what are we doing? Scaling down to an even lower time frame, getting a prime time entry. Okay, we mark off that 5 minute imbalance. We see it gets pushed up into here, right as market opens. Okay, then we get a break of structure right here off of this candle close. Okay, boom, you can enter into short position off of that. I had targets at this liquidity down here, and then also at this little, I guess you could call it an order block, right? And both of those take profits ended up getting hit before the rest of our position got stopped out at break even. So hopefully with that explanation, we'll do a couple more, gives you insight on how to use these imbalances. Remember, we are not entering when these get hit, we're not entering right when like price pushes up into here, because right, if we did that right here, we would have got stopped out, right? If we entered just off of, break of structure off of, this thing, we would have got stopped out. I really like to use these as like my patient entry. So essentially with imbalances, all I like to do with these, I use them for retracement. So let's say we get a liquidity sweep, a break of structure, and market dumps, right? And it doesn't give us a good risk to reward. So we want to wait for a better trade. How can we wait for a better trade? We wait for a retracement into a fair value gap, scale down to a lower time frame, and then find a break of structure off of that, because that's confirming that, okay, price is going to continue in the right direction. Make sense? Okay, let's do a couple more examples of seeing how these work. Okay, so right here on GJ, we have high time frame highs right up here, correct? Then what happens? We get a break of structure on the 15 minute. We get a sweep of liquidity, a break of structure on the 15 minute. We have multiple fair value gaps here. We have a fair value gap right here, and we also have one right up here. Again, mark out both, see how we want to find a reaction, okay? Scale down into a lower time frame, okay? We see the 5 minute, okay, break structure to the upside. That means, okay, cool, that means we're going to retrace on the 15 minute when we see break of structure on the 5 minute. That doesn't mean, oh, complete trend shift. That just means, all right, we'll probably be retracing on the 15 minute because the 15 minute broke structure. The 1 hour broke structure. We're showing bearish confirmation on higher time frames than the 5 minute. So this break of structure to the upside is telling me we are getting a retrace.
So wait, you see how he's got this? I'm guessing this is his liquidity sweep here. He marked it out. Then there's fuck, I'm about to sneeze. Holy shit. Anyway, there's a break of structure to the downside from what I'm seeing right here. Okay, so there's not really a fair value gap here. Then it rallies to the upside. Then it breaks structure to the downside. Again. Then it goes up, breaks structure again. He gets his fair value gaps. Okay, one showed up here, one showed up here. It broke up into it on the 5 minute time frame. And then let's see, once it hits it, you could, I guess, take your trade here and then set your targets. You have one target here, one low here, another low here, and then you could look back and see if it's going to target the other lows. So I want to see where the fuck did that happen today. And there's my fucking indicators are all fucked up now again. I don't know why I could like click onto here and delete it. That shouldn't be a thing. But I'm gonna take Sydney out, and I'm gonna change this real quick before we get into it, because I really want to justify what happened today in today's market. That's really what I want to know. So I'm gonna adjust this real quick. So it's gonna be 1430. And this is gonna be 22. London is gonna be 1430. I really want to justify this from today. 1 to 9. Okay, so here's today's market. All right. I'm gonna take the high and the low of London. Throw it up in there. Change this color real quick. Okay. So we started out with a downtrend, then an uptrend. So here's what we could do here. Here's a high. And where's our prominent low? Now we have a prominent low here. Which I don't know if you could really call this little as dip a liquidity sweep. But this could easily be a liquidity sweep right here. Right? This is the 1 minute time frame, by the way. So I'm gonna open up a couple more tabs, and I'm gonna see if I could get confirmation on the bigger time frames. I'm gonna open multiple tabs to keep it simple because I don't want to mix it up. Okay, anyway, all this shit saved, so we'll leave it like that. Okay. I don't know why my indicators are off again. Yeah, and it reset, which is fucking bad annoying. I have a free indicator on TradingView with 95% accurate working. What is this indicator? What works about it? Because the way I'm looking at it, I'm just, making my own formula, really. What does yours do? Is it just automatically come up with something? Hold on, I see you guys typing. Hold up, give me 1 second. Oh, fuck. Down 5 bands. Should I full port tomorrow? Nah, I mean, trade accordingly. Don't just full port for no reason. If your shit plays out, then yeah, full port. Which one? I'm only joking. Okay, bet. I was gonna say, bro, I mean, do what you wanna do, but I'm not gonna give you financial advice, bro. And we gotta fucking redo it on this one, because bitch ass fucking shit keeps falling apart. That's why I think I might have to buy TradingView, like, full version. I'm on the cheap, whatever, free version, but 1430.22. This one's 8. 1430. Tokyo 1 to 9. Okay, so now we are all on the same page. Here's a low, here's a high. Okay, so we should be looking at the biggest time frame to start off. So we could do a 5 minute here, and we could do a 1 hour here. So on the 5 minute, here's what's going on. Fresh trading day. Here's our high. Here's our low. So broke out of London sessions low. So we're going to be targeting the highs, right? If liquidity was swept, I would be targeting down. That's what I don't understand is once liquidity is swept, from which I think, okay, that is favorited. I have my favorites. I'm going to look at the liquidity sweeps. So yeah, look, when liquidity is swept, like in this case, from what I would guess, let's look in the higher time frame for better indication. Okay, so look. Here's a liquidity sweep or a low. Oh, liquidity is swept, so it's gonna rip onto the upside. So if we're looking at a higher time frame, like as far as the 1 hour, check this out. Let's delete these, get this shit out the way. We're gonna use the array. So here's our liquidity sweep, right? Closed. Liquidity sweep is done. Now what are we gonna look for? We're gonna look for liquidity was swept. Now it's gonna rip to the upside, right? This is the 1 hour chart. I don't see any. Let's see what I want to say here. I don't see any fair value gaps. Bitcoin to 56K. Let's go. I'm up 5.6K on Ethereum. Good for you, bro. I want to see on the 5 minute if we have any fair value gaps. Here's this. I don't even know if I would want to count that as a fair value gap. Maybe. What are you trading? S&P 500. Then we have a rip to the upside. And here's on the 1 minute. I don't know what I would do. I would probably sit here and wait. I don't see anything too crazy. We're looking for liquidity sweeps after it clears out. London session low. Are you shorting? I don't know. I'm trying to come up with a Lux Algo trend with breaks. Check it out. Lux Algo trend with breaks. Lux Algo trade with breaks. Trend with breaks. Where is that? This shit's locked. Which one is it? Trend with breaks. Trend lines with breaks. Trend with breaks. Fuck. I got the fucking cheapest account, bro. I'm not gonna be able to check it out. I might have to come back to that in the future when I actually buy Pro. But for now, I'm gonna have to just stick to what I'm used to. Stick to what I've been taught. Well, let's see. I'm gonna look for some fair value gaps, even though it's on the 1 minute chart. So as far as the 5 minute chart goes, we are looking to rip up, which it did. Which it did because liquidity was swept. So what is going to be our indication? We're looking for any reason to go up. XAUU, what is that? Someone put XAUUSD. I think Bitcoin down to 56K, so XPX down as well more. I don't know. I'm not really looking at Bitcoin, to be honest. I'm not trading Bitcoin. I'm looking at like S&P 500. What else am I looking at? NASDAQ, QQQ, MNQ1. I'm not really looking at Bitcoin. I mean, I did open it just to take a look. Gold is good as well. Gold and silver. I just got out of a 2-year-long silver trade, so do some setting 1 minute, 5 minute, 15 minute, 30 minute working 95 account. Okay. So I'm looking for any reason to rip to the upside. So closed below London session. Gold's good too. Gold's ripping. Gold's what, at like 5,300 now? Let's see. See what is gold and silver at. Last time I seen some kind of news article on it, was 51.53. That's still hella. Silver's at what, 83? Let's stick to S&P 500. I'm looking for a reason. So London closed out London sessions low. What are we looking for that'll bring it back up? I guess this liquidity sweep here. But then again, this is looking like here's a liquidity sweep. Closed here. If liquidity is swept, it should rip up, right? If liquidity is swept, liquidity is swept. Why is it supposed to rip up? This would rip up. This would indicate that it would be going down. Someone today claimed that TradingView has liquidity volumes. Anyone aware of that? Something called the MIG liquidity edge. I'm not sure what that is. We about to dump so bad after the time you guys tell you more than the chart. Trend lines with breaks, exactly. This is the name of the indicator by Luxalgo. I'm gonna have to test that out. I might have to get another account, or I'm gonna have to upgrade to premium or whatever. Let's see. I guess we could look at broke previous high. I need 3 indications minimum. If you are trading trend lines, go to Tory Trades. Yeah, I don't know what I would do in this situation for today. I would probably go short. I would probably go short right here, even though the higher time frames are saying, you know, basically it's gonna rip up. You know, me looking at it, I'd say it's gonna rip down, but you gotta rely on the higher time frames. I don't know, I would probably try to take a short here and I would probably get stopped out today. I'm just trying to think of what I would do. Or if I see this liquidity sweep and I'm like, nah, this can't be it, I'll probably try to go for the lows. I got a low here, a low here, a low here, got a low here. I guess we could try to target, you know, hey, here's a very tiny liquidity sweep. Could try to target this here. I mean, that's a better looking liquidity sweep in my opinion. And we're trying to target for the upside anyway. So maybe I would take my trade in here. I would look for a break of structure to the upside. Here we could rip our fair value gap. Let's see if we could rip our fair value gap here. Liquidity swept. Here's going to be our fair value gap. And what does it do? It touches it, goes into it. What are we going to look for next? Okay, break in structure right here. Boom. So we probably put our trade here. Where is my... would be, where the fuck is it? We'd be in a long position here, so we'd be at probably this point right here, market. Okay, what are we gonna target? Target 3% of the account. Probably leave it here. I'm gonna target what, previous highs? Nah. I don't know what we would target. We target probably London session. I target London session. That would probably be my trade right here. It's easy to say in hindsight, you know. I'd probably stick to it and get stopped out. Take profit here. Something like that. I'm trying to justify what I would do today. It's easy to say now. Or trade candles of the woman. Candle by candle working 100%. DIY custom tell easily about liquidity. Take some setting. Custom tell easily about liquidity. Take some setting. Yeah, I don't know. We'll see. I gotta see what would we be targeting here. London session highs probably. We'll see. Let's get back into the video. See what TGR is gonna say about these fair value gaps.
Tracing on the higher.
Shit. Like, this is a really interesting trading day. I think they also did a video today about what he did, so I want to play that as well if I still have questions, like if I'm still trying to figure out what they did.
Time frames. Okay, we see the first imbalance get filled. What happens after that? Boom, break of structure.
Imbalance got filled, break of structure to the downside. So
Structure off the 5 minute. How would we enter off of that? Short position off of here, stop above these highs, right? Okay, where can we target? Previous areas of liquidity. We can target right here. We can target this accumulation within here.
if you have a WhatsApp, I could share you, brother. Test it out first. I'm gonna probably keep it on here, to be honest. I'm not gonna share my WhatsApp.
Wherever we want, right? Liquidity.
But I appreciate your help, bro.
And right, all of these end up getting hit, you know, following this, right? There was a big imbalance and there was a big accumulation area down here on the 1 hour and the
What's a test? Hey, yo, you got the same headset as me. That beep made me think. Hello. You guys heard that shit?
4 hour.
That's crazy.
All the way down here. This would have been a great trade to take. All off of just
FVG, everything this indicator tell about. What do you mean? You don't like the fair value gaps?
boom, right? Literally 3 simple concepts that we.
Or Telegram I could send you. I'm gonna keep it on here, to be honest, bro. I don't want to give out my Telegram or WhatsApp. No offense, bro. I appreciate you trying to help, but I'm not trying to just throw it out there like that. You know what I mean?
Learned. Liquidity sweep, break of structure, imbalance fill.
Yeah, so that was a liquidity sweep. I was right. So that was a liquidity sweep. So that's what I'm trying to target here, is this liquidity sweep, which for some reason looks like it got like fucked, basically. Here's the liquidity sweep. Here's TGR's liquidity sweep. What did it do? It went down. What did this do? It went up. Why? So we're looking for down, right? Is it because we couldn't get confirmation? I mean, we got right here. This would easily be a confirmation. Boom, it's gonna rip to the downside. Now we're looking for a downtrend. Since we have liquidity sweep, we have our fair value gap, and here's a regular structure. So I'd probably take a trade right here, and I would get stopped out. Yeah. That's probably what I would have done today, to be honest. I would have failed this trading day today.
Of structure. See how we can start grabbing pieces of our.
There are plenty of fair value gaps and inverse fair value gaps indicators. Yeah, I'm gonna have to look at that.
Building blocks from a strategy, and we haven't even gone over the steps of our strategy yet. We haven't even gone over that yet. And we can already start taking these pieces and putting them together to form a bias, to form actual, like understand where market wants to go. And we don't even have a strategy yet. We don't even have our executions down yet, right? This is valuable.
I could see right now where I would mess up. So me looking at this 1 minute chart is easy to mess up because it's 1 minute chart. But easily if you look at the 1 hour chart, we're seeing that it's got to rip up, right? And there's no fair value gap here. There's no fair value gap here. There's a break of structure. Is there any fair value gaps in the 5 minute though? In the 5 minutes, the upside. I mean, right here, it doesn't really do anything. Right here, and then it dips in right about here. So I would probably buy right here, right it to the top. Yes, I gotta look at the bigger charts. The 1 hour chart I meant to say. That's where you could get confirmation.
Stuff. Okay.
It's better to look at the bigger charts. You're not only supposed to look at the 1 minute. Obviously, the 1 hour is gonna give us a better prediction than the 1 minute.
Boom. That's another example.
Did I point out that there is a break of structure here. Yeah, in the 5 minute. So it's flipped. Like 1 hour is obviously break of structure to the upside, and the 5 minute is break of structure to the downside. And same with the 1 minute. So we gotta stick with the higher time frame. So once we confirm with the higher time frame that we are looking for break of structure to the upside, we shouldn't let this liquidity sweep tell us that it's going to go down, because we already know we have a higher teller that it's going to go down or going to go up.
Let's go into GBP USD. Oops. As you can see, I marked out a little imbalance within here that we just filled. I'm going to actually remove all these drawings though, so we can talk about it. Let's see. Let's see if we can find a fair value gap getting filled. This is a perfect example. Okay, right here on the 4 hour, again, right? This is applicable to every single time frame. 4 hour, we get a break of structure. Okay, we see an imbalance right here.
Oh, so that is a fair value gap. That is actually a red candle. This is a red candle. This is a red candle. Here's his fair value gap. It dips into it, so he's going to be shorting it, right? So we're targeting lower lows. So I'd probably put my trade in right about here and just start ripping down. Probably go up, barely get past break even and start ripping down. That's a 4 hour chart though.
We also see an imbalance within.
Bro, I told you it's easy to check everything in these indicators. I take indicator from YouTube. It's free on YouTube. You could check these indicators too if you want. If you have any problem. Yeah, I'm gonna hold you up to it, bro. Like I wanna check it out. I'm gonna do some more research, but I'm just doing it more of like I'm trying to do it manually, if that makes sense. I guess I don't know if these indicators automatically like put this out there and put the marks on there if it catches it. Is that what you're saying? Like, is it automatically calling out these fair value gaps and these liquidity sweeps? Is that what that is? Because if that's the case, I'm probably for sure gonna check it out, and I might just get TradingView Premium like today.
Then here, okay. What are we looking to do?
You could put multiple. Put multiple. Oh, fuck. Multiple fair value gaps. I didn't know that.
We're looking to, right?
So right here's fair value gap. Boom. You could have started your trade here, but it would have ripped more into the stop loss. But then again, you'd probably have better profit.
Scale down into a lower time frame. We know that we broke structure, so that means at least we're going to have some sort of, move down, okay? We're looking for a retracement.
What up, bro?
Okay, we see price rally all the way up in through this.
Trying to learn how to day trade, bro. That's what's going on.
Past it, right? The second we push past this, no longer considering it. Okay, I no longer want it, all right? It's not of interest to me. Okay, then what else do we have in line with this imbalance right here? We have liquidity. Liquidity lying right here. Break of structure on the 4 hour. Along with the imbalance, this looks perfect. What does gold do? Spike up into that liquidity area. Spike up into the liquidity area. Boom. We get a break of structure on the 15 minute. That is kind of drastic all the way down here. Okay, either you can short off of this break of structure right here. Okay, target previous areas of liquidity down here. Maybe the accumulation that caused the rally up, that was from right here. Whatever you want to do. Maybe target the imbalance, the start of the...
Everything these fair value gap, market session liquidity, everything chart per year, everything. Damn. If that's true, then I'm going to have to for sure check this out.
Imbalance right here, the 50% of the imbalance, the end of the
If
imbalance.
it marks everything for you, that's a game changer, bro. Since how long have you been learning? I think I counted it. 16 hours. I don't know. I have to look back in the streams. If you look at my streams, there should be like a whole list. That's basically almost all my training. But I have been off camera trading a little bit on my phone or looking at the charts a little bit here and there. So it's almost pretty accurate. I'm trying to document the whole journey. So like my first trade here, like I did a first successful paper trade. I did it off of live. But my first successful trade, like with real money, with like a funded account, I do want to have on live. So stick around for that because that's going to be huge.
Right here, whatever you want to do, this is just showing, right? We see the imbalance get filled. We see liquidity, again, 2 building blocks, liquidity getting taken out, imbalance getting filled, boom, market falls. Okay, you also could have scaled down to even smaller time.
Concepts have you covered by now. So liquidity sweeps, break of structure, and now we're on fair value gap. So that's like the 3 things. So I have like, this is like the only trade I know as far as this point. So I did find one and I did go through with it. I'm just looking, like I didn't trade today, this morning, and I was looking back at it and I was like, okay, what would I have done? And I'm just trying to figure out how to make the perfect trade, because I did notice, like for example, in the 1 hour that we got a liquidity sweep and it's going to rip to the upside. But if you look at the smaller time frames, like 5 minute and 1 minute, it's actually quite opposite. It's calling for it to go down. So I would have probably made a short and got stopped out today. If I just stop right now and watch ICT. Who is ICT? You should also cover demand and supply zones. I'll probably get into that. I'll have to do some more research
5
on
minute.
it.
Yeah, you didn't even get a break until the same area on the 15-minute sub. Again, another example of this working. Let's find another example on a smaller time frame. Hopefully you guys are starting.
What assets will we trade? S&P 500 and QQQ, probably NASDAQ, the big guys.
Pieces together, start to figure out, okay, this is how we can use this to our advantage. Okay, right here, right? I'm literally just eyeballing this stuff, seeing whatever I see. Right here, we get a 1 hour break for structure to the upside. Let's look at now. Seeing. Okay, right here, right? I'm literally just eyeballing this stuff, seeing whatever I see. Right here, we get a 1 hour
break of structure to the upside.
Break for structure to the upside.
ICT created these concepts and he knows them. Trust me, just look him up. ICT. I'll take note of that. Let's see. I'll take note of that and I'm going to check out his videos as well.
Let's look at the high time frame. Okay, we're bullish because we had that daily break of structure to the upside up here. Okay, we see price drag on down, fill into this accumulation that caused the rally up. All right, and we'll talk about accumulation and distribution later in this course as well. Okay, so we see a break of structure to the upside. Okay, we see price coming back down. Okay, if we go to the 4. If we go to the 4 hour, we can see, boom, we have this imbalance right within here.
Okay.
We see price, boom, break structure, fall back down within here. We also have 1 hour imbalance right in here. And honestly, this is the one that I would prioritize due to the fact that we can see, hey, this 1 hour wick fills all the way up to pretty much this wick.
So he's showing these fair value gaps. If it broke structure, why is it not going down?
So this isn't even an imbalance. We're waiting for it to come down in here. What does price do? Come in here. What can we do? Scale down onto a lower time frame. Maybe 15 minutes since we're on the hourly. Okay, what are we waiting for? Trend shift, trend change. Okay, we do get a move here, break of structure right here. What would I ideally want?
Okay, because he's looking at a blue candle which is up, which is a green, so he's looking for it to go. Okay,
probably
that makes sense.
For this liquidity to get taken out, right? Because as we start scaling lower and lower, we can see, okay, from here and up, that's not where the imbalance is, because this wick filled the imbalance. Where's the imbalance from actually? Right here, from this wick to here, right? This is where the imbalance was. This is where we were not able to get filled. Okay, so we see here, boom, we get a break of structure, probably faking people out. And, right, if we scale down to the 1 hour, Where was that? Whatever. Oh yeah, if we scale down to the 1 hour, this, boom, it's just a 1 hour candle
Okay, so yeah, he's targeting here.
up. We didn't get very much confirmation on this. This looks.
ICT taught TJR, and he started teaching these things in 2016 for free and earlier on the websites besides YouTube. Really? Is that true? Did ICT really teach TJR?
It's like a sort of retrace on the hourly. However, we do see boom, doji candle, okay? What is that telling us? Okay, remember, we talked about candlesticks on literally like our second day doing this. We talked about those doji candles, talking about indecision in the market, right? We see indecision within here. Okay, we don't get a break of structure here. We don't get a break of structure here. We don't get a break of structure here. Boom, we finally get the break of structure right here on this candlestick, and that honestly looks like that's when the hourly broke structure as well. So that's 2 breaks of structure. Yep, broke structure, or actually broke structure. Broke structure with this candlestick, so I guess you would have gotten in a bit earlier. But still, same thing. We see break of structure, okay? We see a rally on up, okay? Maybe our first take profit is up here. Maybe you get scared because price comes up a little bit, misses your first take profit, scares you, dips down one more time into this fair value gap, filling the imbalance once again. Price rips, takes out previous liquidity, and then in turn fills the imbalance that we had within here. As you can see, imbalance gets filled. What do we get? Small reaction. Then what happens? Imbalance right here. Boom. Gets filled. Break structure. Rally. Higher. What happens next? We target this area of liquidity. See how fluid this moves. See how fluid this is. It is clockwork once you start understanding these concepts. I was literally able to flow through, fucking swimming through that chart, going over it. Obviously, it's easier to do in hindsight, which is why we got to practice, and which is why, you know, we got to get experience in watching these happen live. Okay?
That's what I want to do. Watch it live.
You will be
use the paper trades, and I'm gonna start trying to do that. Is get up, get on live at 8:30 when market opens, and do these trades live and go through it and see exactly why it played out, what happened.
Spot these things, and you will be able to actually take trades off of these once you start getting a feel for them. Once you start getting.
Anyway, TJR is a good way to get an idea of how the market, and ICT goes more in depth. And after his boot camp, you know the basics, and then you could go more in depth with ICT, the inner circle trader. Okay. What session are you trading? I am trading New York session.
Used to see how these markets move. Okay, I literally just laid out like 5 to 6 trades that were fucking baby food, okay, for imbalance plays. And I don't even really like taking a lot of trades off of imbalances. To me, imbalances are mainly used for retracement tools to figure out where market wants to retrace to, and then from there I find other reasoning on why I want to get in. Whether it's an order block, whether it's a break of structure, whether it's a liquidity sweep within an imbalance, then a break of structure, I use it as more of a confirmation rather than an entry. Okay? So, that being said, hopefully that gives you guys a solid understanding of fair value gaps. And the next concept we are going to move on towards is order blocks, okay? We have liquidity sweeps, done. Break of structure, done. Fair value gaps, done.
If you want to backtest for free, use FX Replay is a great way to track your progress. DIY Custom Strategy Builder, ZP, V1. Bro, check it, please, on TradingView. Both indicators are the best. I'm going to take a picture of that as well. I'm going to take your advice, and I'm going to look at the other one because I did start it. And I'm going to take a picture of it because I might forget it if let's all go trend with breaks. I'm going to take pictures of that. I'm going to take note of it, and I'm going to probably use it. What do you mean, what instrument? What are you talking about, bro?
Now on to order blocks. We're going to do the same thing, part 1, part 2, and then part 3, putting it all together. Part 1, explaining it. Part 2, spotting it. And part 3, putting it all together, how we can use it as a trade. And hey, man, we are starting to get a lot of these pieces together. After order blocks will go into equilibrium, and then from there, it's strategy time. And you're probably thinking, damn, man, we're like getting close to the end. No, we're not. No, we are not, because there's still a lot more to talk about. There's still a lot more to talk about than just strategy, and obviously that's why we're flip-flopping back and forth between psychology and this trading stuff. So hopefully, it's been 2 weeks now. Hopefully you guys have seen an improvement on your mental discipline, and if you haven't, and you haven't been following everything that we've been doing in the boot camp, if you haven't been doing your homework, maybe that's something you need to get on. Maybe that's something you need to start doing, okay, to start improving yourself. All right, with that being said, that's it for me. That's it for Fair Value Gaps. I'll see you guys tomorrow. We're talking more on psychology, talking more on discipline, and then the day after that, we'll get started with order blocks. All right, hopefully you guys learned something from this. I'll see you boys tomorrow.
No shit, so no homework. Anyway, I'm gonna give myself homework. I'm gonna look for these fair value gaps. I'm gonna see what the fuck's going on. So let's see. We're on the 1 minute here. New York opens at 1:30 p.m. in India. New York for me is 8:30 a.m. So let's see. Here's market open. I don't know if I want to count this candle, but let's count it anyway. Any shit going on here. Rip to the downside. Here's one. It's very small. I remember I was looking at this one as well. So, looking at previous day. Okay, I'm going to get rid of this shit because I think we're done with that. Get this shit out of here. Alright, previous day, what are we looking at? We're going to go into the 1 hour as well. I'm going to pop this open. Okay. I guess this is broken. I don't see shit. So, this is March. Monday to March. Monday to March. What do we have here? Liquidity sweep. Boom, boom. Guess this, yeah, look at this. This is liquidity sweep here, so we're looking for the downside. You're looking to go to the downside. And it seems like it was just going to the upside the whole time. Guess this is a little liquidity sweep. So yeah, it's hard. Everything into indicator, and it's free. Don't use 1 minute. Why not? I trade in the 1 minute. I think I'm gonna use the 1 minute, to be honest. Here's a liquidity sweep. A rip to the upside. Okay, and it almost hit basically previous high as it did. Wow. Here is this a liquidity sweep though? It went up, but then it crashed down. This could be a liquidity sweep here. No. No. Here. Rip to the upside. Let's go another day back. I don't think we can. Need the premium version to go back that far. I'm just kind of gay. But, wow. I still don't know about this damn liquidity sweep here. Here's our peak. No liquidity sweep on a 1 minute. Is that true? That might actually make sense. That might be the problem that I'm facing here. Because, guess what? On the 1 hour, this liquidity sweep is pretty legit. Boom, liquidity swept. Rips to the upside. View larger time frames. What do you recommend for time frames for liquidity sweep? Use 5 and 15 for liquidity sweep. Let me see what the 15-minute for the S&P 500. Let's get this shit out of here. I'm gonna do a 15-minute here. You're right. You're right. You're right, because on the 15-minute and on the 1 hour, we have clear liquidity sweep right here. Here's our ray. So here's our low. Boom, liquidity was swept out and ripped up. Whereas we look on the 5-minute, we do have a liquidity sweep here as well. Yeah. We do have a liquidity sweep. Okay. Even on the 1 minute. Because we're looking out more. If you want to open these indicators, I can help you for settings for everything. I'm not gonna open them, bro. I appreciate your help. Like, I appreciate you trying to help me out, but I'm gonna pass on that. I'm gonna try to keep it simple. Where I'm gonna have to, because I want to have where I manually put these in, and I have to find them. I did take pictures, so I'll look at those later. But I just want to learn manually first, so I could get a good understanding of how to actually, what to look for and how to put it all together. So I appreciate it, but I'm gonna wait. Yeah, so we are looking for liquidity super rip to the upside. Huh. Okay, since we know we're looking for boom, liquidity was swept here, right? We're looking to rip to the upside. Let's say we're taking this candle by candle, okay? Obviously liquidity was just hit here. Now we're looking for a fair value gap on the upside. Here's break structure, okay. Break structure again, okay. Rips down. Here you can see a fair value gap, but we're not looking to go down. We're looking to go up. Setting is the most important thing. I bet, yeah. I can't. I just have the free version, so there's no way that I'm going to be able to even set up these settings with those two, because I'm already maxed out on this one because my shit's like glitched out. There's not a chance that I'm going to be able to put two on top. Where is this damn fair value gap going to be? I didn't get a fair value gap, so I don't even know if I would get into this trade. So this whole time we were looking for the liquidity swapped. Where is this fair value gap going to be on the 1 minute? It's a 3 candlestick. First, second. Okay. Here? Possibly? No. Here we got one. Here we got one right here. And TGR was saying we could put multiple, right? So, boom, this is not going to be able to be. Okay, here's another one. Look at this. Just about here. And what happens? Look, we dip into it. Here's a break of structure. And look, here. This is where I would put my trade. Long position. Broke in. Here it broke structure. So I would put it right here. We could target previous lows. And what are we gonna do? Target previous highs we could, which is right here. Here's the previous high. Got another one here. Here's the high. Here's the high. Or we could even zoom out even more. Well, obviously we're in hindsight, right? Here's the previous high. Here's the previous high. Alright, look at how much highs it broke. Went back to this one. That's fucking crazy. So I would probably play it safe for the first 2-3. Right? So we could easily put it to... It broke the first one. We could have put it to, you know... Even that's pretty fucking good take profit, to be honest. It wouldn't have even dipped into the... But dude, look, it went even higher. So it went to break even here. That's crazy. We could have even taken it to this one here. That would have been a big bank. Let's say we're just targeting London session high though, which is this one, which is pretty valid. I don't want to say, you know, oh, we'll target the highest point, because that's easy to say now. Let's target London session high. Okay. So we're targeting the London session high. Obviously it ripped through London session low. It's going back to London session high. We'd probably take profit. So I want to say now I would probably take profit at London session high. And we would probably get there. Boom. Right about here. That'd be a pretty long trade. An hour and a half trade right there. After, you know, the market's been open for, we'd be looking from, dude, we'd be on the market for 2 hours. Look at this setup. 2 hours, and it'd be 10:30. It'd be around noon until we finish. So yeah, we'd be here all day basically looking at this setup. But dude, for what, 3 grand? That's not bad. That's not bad at all. Okay, so I think I have a better understanding now, knowing that we could put multiple fair value gaps in, and I'm gonna try to get more onto the live trading when market does open, because I just justified it now. I think I have a better understanding of what to look for, especially when we're in the 15-minute chart. We're looking for, boom, liquidity was swept. We're looking to rip on the upside. Not bad. Not bad at all. So, alright, perfect. I think that's pretty good for... This is now the second stream of today. And we're gonna see how to read news data tomorrow. We'll see. I'm gonna probably get on tomorrow. I don't know what time. Probably later in the day, to be honest. But I think that's gonna be it for today's stream. Today's stream was actually killer. We're at, 1,150 views for the whole day. That's crazy. Usually I average like, what? Shit, 200 if that, 300 if I'm lucky, 400 is like record breaking. So this stream went actually really well. I'm actually really happy because this is a 18th stream, or plus minus 18th day of the trading process. So I'm not even close to 100 hours. I think we're at like whatever, 18 hours ish. So this is just the start. This isn't even the beginning. So if you guys are interested in trading stuff, then subscribe. I mean, my whole journey is going to be live streamed. So what is this? I would recommend hopping in a few of John Trade's live stream in the morning. I watch him every morning while I trade. Okay. Yeah, I don't think I will. I'm going to try to figure it out myself. But if you guys want to see me trade live, then dude, power to you. I'm going to be here. So we'll see eventually, you know. But yeah, if you guys like this, then subscribe, because there's going to be more streams. Never give up. Yeah, I'm not planning to, bro. I've been wanting to trade for years. I just never put any time to it. And now finally, I don't know how many years later, I'm actually putting time into it. I don't know. I probably thought about it for the last 6 years. I just never really did anything to get to this point. So yeah, that's going to be it. If you guys want to see more of this, subscribe. And I'll like the stream so we could get some boosts, you know. And so we could grow a bigger audience. Follow rules, keep patience. True. Yeah, that's why I like TJR, because he's really big on the whole discipline part of trading. Because he does a video of, you know, trading on the chart, and then he does a whole different video the next day on psychology part. So yeah, that's it. I'm gonna cut the stream off now. like I said, subscribe if you want to see more, because this is the best stream I've had so far, and it's slowly doing better each time. So, alright, I'm going to see you guys. I'm cutting the stream off. Hopefully I'll see you guys again.